Hello everyone, in today's video we're going to be talking about how we changed the trading industry completely together. We're also going to be talking about the S&P 500, the NASDAQ 100, the Russell 2000, the dollar, maybe even take a look at the VIX and the bonds and the large tech stocks. Alright, so without further ado, let's get started with the video. So first and foremost, yesterday was a huge day. We launched Wave. Wave is the first ever app that shares for free. It shares options trades, crypto, forex, futures, and stock trades. We're going to be sharing all 5 types of securities trades straight to your pocket. You can download it on Apple or on Android. It is the first app of its kind. We just launched it yesterday. Very, very excited for this. It literally shares all of my trades, and we're going to be sharing multiple different traders are going to be sharing multiple different trades. It's a way to rank everybody against each other. You'll literally be able to see everyone's entry and exit, the reasoning behind their trades, as well as their success rate for all of their trades in real time, completely for free. So if you're interested, go to joinwave.io. The link is going to be in the channel description. And if you don't want to do that, simply go to your app store, type in Wave Get Signals, and download it like that. All right. So I'm very excited for this. As well as just downloading the app. Also, after you download the app, there is a Discord server within your profile section that you can join for a free Discord. You can see that it is a very vibrant community already a day in. There are tons of messages, lots of people that are all just trying to learn. There's an educational section that we created as well that has everything that you need step by step to become a very profitable and successful trader, all completely for free. So it's actually really, really amazing. So I would love it if you guys joined up. And yeah, this is just the beginning. I was telling you guys for months that everyone was still very, very early to what is yet to come. I was telling you guys this months ago. And still, I can still definitively tell you guys that everyone that's still watching this is still very, very early to what is yet to come. Thank God. So, let's just get it started, honestly. I'll see you guys in the Discord. Download the app, and sky's the limit. So first and foremost, you know that I was leaning short. Why were we leaning short? Very, very simply, let me quickly recap what was said over the weekend. I was leaning short because of Apple. Purely, point blank, very simply because of Apple. And the reason for this is because Apple, this is a daily chart of Apple. And I went over this over the weekend. Apple opened outside of its upper level of the Bollinger Band. The Bollinger Band is very, very important because the Bollinger Band, the upper and the lower level, is 1 standard deviation away from the median line, which is the 20 exponential moving average. And if you are trading outside of the standard deviation to the upper or the lower level, that denotes extreme overextension. So generally, if we are trading outside of the lower level of the Bollinger Band on the large mega cap tech stocks, as well as the SPY, NASDAQ, and IWM, if we're trading outside the lower level, then there is generally a good chance that we get a bounce back up. And if we are trading outside the upper level, there's a good chance that we fall back inside. Okay, so now we saw that Apple had a big gap up Friday, right? And then on Monday, we still opened. You can see that we opened here outside of the upper level of the Bollinger Band. When that happens, that is extreme overextensions to the downside or to the upside. And it has always signaled a move to the downside. So what we did was we looked back in history. Every single time Apple opened outside of the upper level of the Bollinger Band here, we always ended up falling back inside, okay, for at least 1 day afterward. And what ended up happening with the SPY as well was the SPY was also very bearish. Okay, so Apple was the reason why the market in general ended up falling lower. And we took that thesis. We saw that happened multiple times in history. Actually, every time in history. We saw that it happened. And for that reason, we were bearish on the overall market. Okay. And because we were bearish on the overall market, right? The SPY, we also saw that the SPY was basically stagnating at a level of resistance, a prior level of resistance, while Apple was being very overextended. So Apple was showing extreme overextension, and you had the S&P 500 failing to break above any level of resistance. That is extreme weakness. So this was just purely an amazing opportunity to just lean short, and that's basically what ended up happening, right? So today now, right, we came to these levels of support down here at 437, 438, and we felt the market starting to stagnate at those levels. This morning, I was saying that I would be leaning long all throughout the day, because once we got to those levels, basically, this is where people would begin to cover their shorts. We were short up here. Down here at 437, 438 is when people would cover their shorts. And that's why the entire day, basically, I was just leaning long. I was not feeling well all day. So I didn't really get to capitalize on the upside movement as much as I wanted. But the downside move played out perfectly. Okay. So now moving forward, what does that mean for the market? We just recapped everything. What does it mean now for the market moving forward? All right, so what I first want to look at is the seasonality chart of the S&P 500 over the past 20 years. We can see that July is basically the best performing month, right behind April. It has an average return of 2.2% during this month. April has a 2.3%. Every other month is nowhere close to July or April, okay? And there's a 75% chance over the past 20 years that July has this high of a move to the upside. So now we know that according to statistics, July is supposed to be a bullish month, okay? So now this is a monthly chart of the S&P 500, right? Technically, we should be green for the month according to what we just saw, right? We are down 0.82% for the month. And all right, that's way better. For some reason, the format of the window was all messed up, but now it looks a little better, all right? But basically, the S&P 500 is down 0.82%. With seasonality, we should be up. We should be positive for the month, okay? So now, as we continued falling to these levels of support at 437, 438, the SPY was down over 1%. So the easiest trade to make was to go long August calls, because if the SPY is going to regain these 0.82%, it has to gain 0.82% for it to break even. And then it's going to become even more positive after that. So there's a chance that the SPY can go up to at least 0.5 to 1%, right? Anything positive is still a gain if you get into calls, because according to July's seasonality chart, there's a 75% chance over the past 20 years that the SPY has an average gain of 2.2%. So, that's why leaning long at these levels of support paid so well. And obviously on a monthly chart, this looks like a very, very overextended move to the upside. By no means does this look like a sustainable move to the upside for anything. But we had the same setup back here in August of 2021. This was a very, very similar setup here, where we ended up holding this very, very high level of this portion of the candle here, clearly above the 23.6% fib of the month. Very similar to what we have going on right now, okay? So this can easily continue rising up, but that's essentially why I was leaning long, especially at these levels of support down here at 437, 438. So now back to the daily chart, we have a gap to fill down at 441.11, which is the low of Friday's candle. And then we have a gap to fill as well over here at 441.90. So there's still more room to the upside for a gap fill potentially. And today we filled the gap from June 16th. So there's still more room to the upside. We held this level of support. The major level of resistance obviously now is 440, and then the 440.50 level. All right, the main levels of support to the downside are 437 to 438. All right, very, very simply, that's basically it for the SPY. We just need to see if this screeching, essentially Apple was showing extreme weakness, right? So now the SPY, it dropped very dramatically. So what's going on right now is they are trying to pull the market up as best as they can, and they painted a doji candle. They tried to pull it up. The market is very, very heavy. They tried to pull it up. If they cannot sustainably pull it up, the market is going to fall very, very dramatically. So in my opinion, if we drop below the low, we can really, really begin to fall. The momentum can get really, really devastating, in my opinion, to 434, 435. We can easily fall to that level. And that's what I'm thinking can end up happening. All right. So there's that for the SPY. Let's take a look at what is going on with Apple. So because Apple was the main reason why we were bearish to begin with, we have to key off of what Apple is doing now on the daily time frame. And clearly, Apple ended up bouncing back very, very dramatically and closed above the prior day's open and close. So this is kind of getting tough to be very, very bullish. This basically, if Apple can continue showing strength, then being bearish on the SPY is not really going to be intelligent. If Apple can close above this high here, Wednesday's high of 193 basically, then there's a good chance that, like, you know, we're not going to continue falling lower, because this basically solidified the move already to the downside. Apple basically fell over 2%. So that was the move to the downside potentially, right? And now this was the move back up. We're at a very, very interesting moment here because bears are shorting with a 193 stop loss. So there's a 1 point stop loss here with a target below 190. And basically they're targeting back this uptrend line. So we've tapped this uptrend line 1, 2, 3, 4, 5, 6, 7, 8. And now we could potentially touch it 9 times. And this uptrend began in January of this year. So basically, we can end up touching that level very, very close here. We're very close to touching it. So that's where bears are basically targeting this with a pretty decent stop loss. A 1 point stop loss for a potential multi-point gain to the downside. So it's a good trade to the short side, technically still for bears. But we just have to key off of Apple. 193 is a major, major level of resistance for Apple. And of course, 190 is a major, major support for Apple. All right. So with that being said, there's that for Apple. We're keying off of what Apple is doing to judge what the rest of the market is going to do. Next, we need to take a look at the dollar. All right. So the dollar has an inverse relationship to the market. So if the dollar is doing well, then that means that the overall market should be falling. Okay. So the dollar is clearly in an uptrend. We're holding these levels of prior support and we're continuing to go higher. So this is still technically strong on the dollar. What we really need to see now, these 2 wicks that we had here at these levels of resistance, that's not really what we want to see for dollar bulls, right? Because it's showing that it can't break above levels of resistance. So what we really want to see is a break above these prior levels of resistance. They pair perfectly with prior levels of support and resistances back here as well. So if we can break and close above today's high at 103.6, then we can easily continue flying higher on the dollar. And if we continue going higher on the dollar, then that means that the market is going to continue falling. But you can clearly see that the dollar is having some trouble here at this level of resistance. So if it fails here and it breaks lower, this is going to be very, very bullish for the stock market. So right now, the dollar is in a precarious position as well. So it's looking pretty interesting. Tomorrow is going to be very, very interesting to what is going to happen with the overall market and the dollar. So yeah, there's that for the dollar. We just have to monitor what happens next on it. To make a long story short, this is a chart of the NASDAQ. Most tech stocks, most large tech stocks, we dropped, right? And then we got to bounce back up to fill this gap. And basically, it's no different with the NASDAQ. Very, very similar situation with the S&P, all right? If the NASDAQ ends up breaking today's low, then there can be continued downside risk. And once again, very simply, the levels of resistance obviously are going to be the 368, 369 level, and then the main levels of support are today's low, which coincides with the high of June 23rd, which is the 364, 365 level. So that's basically the zone on the NASDAQ. And then very similar, sort of similar, we can take a look at the IWM. We didn't close above the open on the IWM, but again, you know, we wicked, we fell down sharply, and then we bounced back up towards the end of the day on the IWM as well. So yeah, there's a long way to go for the IWM to catch back up. There's still money flowing into the tech stocks, and the tech stocks are basically holding the overall market up. The IWM gave back all of its gains that were basically made since June 23rd, whereas the NASDAQ is still relatively much higher than where the IWM is, clearly. All right, and then when you take a look at the SPY is also clearly much higher relatively to where the IWM is, whereas the IWM basically gave back all of its gains the past few weeks. All right, so we just basically have to key off of what Apple is doing. The SPY has to keep its thing, like it has to keep its it has to maintain its grip on the market and be able to keep the momentum pushing upwards, or else they're just going to let this fall. And I don't know if they're going to let this fall, because it can get really ugly. 434 or 435 are definitely on the table, and then we could easily fall to 430. So and then we also need to monitor the dollar. All right, so I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff, and I really, really appreciate all of your love and support. Once again, thank you guys so much for everything, and I will see you guys bright and early tomorrow morning for the live stream. All right, thank you. Take care.